You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time for the rockin'est show on the old network. It's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And wherever you're listening to this, could be iTunes, could be our website, could be wherever you find your favorite podcast programs, including our app. Make sure if you haven't done so yet, you jump on over and you grab the full network feed. It's okay if you subscribe to Option Block. We don't hold it against you, but there's a full network out there, a full dozen programs for you guys to enjoy. We guarantee you we'll keep you busy with options content. Of course, wherever you listen, if you are so inclined, if you like what you hear, throw a few stars, a few reviews down there. It always helps with the search results there in those different platforms. And of course, for those of you who are too hardcore, you say, I don't want to wait for the podcast, we make a nice little bonus available for you guys. Yep, we make it live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. If you follow us on social media or the other platforms, or you've been to our website at least once, you've seen the link, grab it, set it and forget it. It's the same link every time. Or you can always just follow us in Mixlr. You'll be notified whenever we go live, not just with this show, but with volatility views on Friday, with TWIFO, with CME over there on Friday. Even this week, we had some fun interviews in the middle of the week, a little surprise bonus for you. So if you're not doing so already, make sure you follow us over there on Mixlr so you can enjoy all the live stuff as it comes your way. And of course, however you listen live after the fact, make sure you hit us up. Questions, comments, insights. We do like to hear from you guys. And joining me on the old program, we got our usual cast of characters plus one. Let's start off. You know, I was just talking to somebody from New Hampshire, so let's start off in that same vicinity, and let's move over a state to the heartland of New England, a.k.a. Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How are things? You guys have power back in Maine finally?
We do have power back in Maine. And we have rain in Maine, and I mean, I guess we're by New Hampshire. That's all right. I mean, I guess I'll take that as a state to be next to.
New Hampshire adjacent. That applies.
I might be the only state we're next to, by the way. Now that I come to think about it, we're trapped by New Hampshire. Who would have thought? I never thought of it
Unless
that way.
Unless you count Canada as a state, but I don't think most people would count it. So
the Canadians don't. Yes. My Canadian clients definitely.
The 51st
state ready for that.
Known as Canada, a big one, a big state up there. You can't forget
big
that
state.
one. That one. So good to hear you have power again. The hamster wheel is spinning back in Maine. A little bit closer to home, we stopped by the sleepy hamlet of St. Charles, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Live free or die. That's my all-time favorite state motto, speaking of New Hampshire. So good to be here today, and if I couldn't be in St. Charles, I wouldn't mind being in Maine or New Hampshire for that matter, or even Canada.
Well, there you go. You're just an easy man to please today. And also joining us today on our panel, our plus one. He's been on, but it's been a while. So happy to welcome him back on, Mr. Dan Cook, the major domo of BizDev over there at NADEX. Mr. Dan, welcome back to the program, sir.
It is great to be back, and I'm right where my favorite spot is, right here at the Options Insider Studios.
There you go.
Hanging out with my friend Mark.
Looking forward to sampling our adult beverage offering after the show. What is your official title over there? I know Major Domo is a fun one.
Director of Business Development, but after that introduction, I'm thinking about having my business cards changed.
I think Major Domo is, I promoted you. You are now officially the Major Domo. All folks at NADEX have been warned. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is the portion of the show we break down, surprise, surprise, what's trading. And after a bit of a rocky start to the week, it seems like the bulls are back in charge. Most of the major indices up firmly in the green today, 1% or close to it on the S&P and the Dow side, both of them flirting with that 1% to close the day, up about 0.9%. So close to it. The tech-heavy NASDAQ leading the charge, up nearly 1.5% on the day. All that green on the screen means our old friend VIX taking it on the chin. Just, it's funny, I saw a bunch of people tweeting yesterday and the day before, oh, VIX is back. VIX is great. And I just said to myself, that's the kiss of death. Once they do that, it's dead. And sure enough, it's back on the downside. It's still comparatively rich. It flirted with 12 handle even today. So it's compared to we hit an 8 handle not that long ago. So compared to that, this is almost a 50% rally. It's madness, craziness out here. So these lofty heights, I don't know. It's hard to handle this, Dan. There's so much volatility in the air. That said, you're our guest, so you get pride of place. You guys, have a little bit different perspective over there at NADEX. You're really quick. It's been a little while since you were on. If for some reason we have a newcomer who doesn't know what NADEX is, give them a quick overview and then break down, what's been lighting it up over there. I got a feeling, just a hint, maybe some energy has been lighting it up over there.
Absolutely, Mark. We list contracts where NADEX is a little bit different as we are an exchange. We're an exchange that's designed for the retail trader. So all of our contracts are limited risk. There are options, floor and ceilings on every type of contract we offer. So it gives the individual active trader, somebody that wants to be active in the market, an opportunity to get in where they can really tightly manage their risk down to the dollar. They know what their maximum exposure is with 100%. Doesn't matter if World War III breaks out or if they're trading oil and all of a sudden there's some agreement that's reached in the Middle East which just sends it flying. And that's really our core focus is on that individual trader. And as you just went down the rundown of the equities, as you can guess, the way oil's been moving this week, we've seen a lot of attention at oil, both directional trades as well as direction neutral strategies coming in. Also, the NQ. We have a contract based on the NASDAQ E-mini. We call it the Tech 100 because E-mini, NASDAQ E-mini is copywritten, but it is based on the CME's NQ contract. And the way that thing's been flying around has been a very exciting contract to watch and for our participants to trade. Along with oil, gold hasn't really been moving a ton, so we've actually seen quite a few people just looking almost like a collection premium type strategy. With the difference of when you're selling, obviously, a traditional option, it can go forever against you. With the limited risk aspect of that, it gives them a level of comfort where they could take a loss if it does make a big move, but they already know what that is up front.
People are slinging obviously a lot of energy over there in NADEX land, but binaries obviously a different use case, very short term, and there's a lot of different uses for that. We've seen people in the past, maybe using binaries as a strangle hedge against traditional options positions, or they just think, WTI is going to rally in this time frame, I want to buy it or I want to sell it. What would you say? You said energy's been lighting it up. What would you say is the predominant use case out there in the energy? Is it just straight up buying binaries to spec on a move? Is it selling? Is it using the straddle as a hedge, or strangle as a hedge? What are people doing out there?
It's a little bit of everything. A lot of it is directional trade. They have a bias, bullish, bearish. They're going to buy or sell. These are short-term options, and one of the nice things about those is if you look at the Wednesday inventory report, it comes out every week on oil. Right. Nobody knows which direction it's going to head. It's a surprise report, but typically you get some movement. In that case, we'll see something more akin to a strangle, where they're taking both sides, absolutely direction neutral. Obviously, they want to try to get in with the lowest risk possible, but still have a pretty positive upside if even one leg of it goes in their favor. And so we see that particularly anything that's going to be moved by a fundamental announcement, such as oil on Wednesdays, or when we come up to the beginning of the month, non-farm payroll, people will trade the equities using the same types of strategies. So it's a little bit of everything depending on market timing, I guess, for most of our participants.
So market timers over there in NADEX land. Interesting. So I always find binaries fascinating in terms of because the use cases you're right are so different. And they're interesting products too because they're kind of like a gateway drug for options. People start off, they understand a simple yes/no kind of contract like a traditional underlying, and they say, I want to take the next step. I think binaries are a good step to get them along that, and then they start using those, and maybe they graduate to using regular options with a binary hedge or something like that, and then they get into our neck of the woods. So we like all those folks out there. Speaking of our neck of the woods, Mr. Rock Lobster really isn't in it. He's pretty far away, but we'll still let him talk nonetheless. Mr. Rock Lobster, I got to imagine this has been an interesting time over there in the pitch chat with VIX actually showing signs of life.
It was actually. We were looking at. I was just explaining to some of our gold level members in our little live part about how VIX can be down, but the strikes are up. So everybody that had iron, we're looking at iron condors and trying to teach people how iron condors work and stuff, and they're like, oh, well, that's freaking annoying. So. Volatility does it's not that it does odd things, it does relatively predictable things. Of course, but you can't predict what volatility is going to do. I think the guys at Citadel might be able to. At least they are front running everybody.
They just make volatility move how they want. It works that way too.
They just go, it's going up. They take it up. But as far as we did have some movement, but the thing is what I believe Don has said 5,000 times. He feels like he's the guardian angel of the show some ways.
I just invoked him on another show recently today too. So it's just twice in one day, Mr. Schlesinger getting some love.
He's gonna be tweeting in again or something like that.
He's listening, so he will.
But yeah, we had enough of a move. What was amazing, I'm not going to say amazing, but VIX went from 989 to 14.5, and the SPX was down 1%, over a week. So the types of moves that are driving up VIX, except for I think just a brief moment of panic or something yesterday in the morning, it's kind of doing what it's supposed to do. And as far as vol, we do have a lot of volatility back in the market yet? Not yet. I think there was, I don't know, even Mark and I were trying to figure out like kind of what was driving vol. Japan looked weak, and there's some of the indexes kind of follow each other on the, between Europe, Japan, and Europe, Japan, China, and here they like it when the other markets close up or down. If they close down, usually we have a down day here or start of a down day here. So, but that stopped. The Nikkei was up a little bit, and the House passed tax reform, and Walmart, probably the oldest of the oldest retailers, is about to trade 100. So that was something else that was in our pitch chat. That was some.
A lot of your hardcore slinging Walmart over. I don't see a lot of them being into Walmart, but it's kind of hard to argue with it these days.
Well, it was something that we had looked at. That remember this summer when Amazon basically was crushing Costco and all the retailers. We looked at it. I was buyers of it. Our clients were buyers of it. And also the volatility got very cheap. So you could buy ridiculously cheap strangles in there 6 to 8 months out that are way in the money at this point. Like sometimes things just become a home run. You never intend them to be, but it's just the stock was moving quite a bit. So it's in a market like this, one of the things I teach a lot of our pro clients and our students is long-term volatility when a VIX is 9 gets really undervalued, mostly because the market's moving in one direction, and vol's super cheap, and you actually get very low decay and much more gamma, a lot of potential movement out of position than you'd expect. So it's not like this when VIX is trading 18 or 20, but if they're going to give you, teen volatility in a Walmart 6 to 8 months out, you don't have a lot of vol risk in those positions. And then sometimes, like in a bull market, when everybody just gets happy about a stock, you make a bunch of money. So that is a different way to look at volatility. I know everybody just says sell premium, which is fine if you understand how to sell it, but there's a lot of opportunity in some of this long-term stuff because vol is at such a low. So it's kind of one of those, buy low, sell high. I know I try not to make it too difficult, but anyway, a surprisingly good day.
Don just tuned out because you said to buy vol, so he just
I know
he just hung up. He just disconnected canceled the podcast subscription in
I think
disgust.
he threw up in his mouth a little bit.
Yes, he did.
Right there.
You said the wrong word. You said the B word, and then not the not sell word. That said, Uncle Mike, steer us away from this madness before we lose more listeners, courtesy of the Rock Lobster. What was catching your eye in today's activity, sir?
Well, I was hoping I could say my trademark saying today, but unfortunately I'm not able to. The thing that's couple things catching my eye. First off, in terms of the House passing the tax reform bill, I think that still has a ways to go, and I believe we only have in Congress roughly 13 more working days this year or something like that because of the holidays. I'm not 100% sure on that, but my point is that I'm not convinced that we're going to have a tax bill passed soon. Don't get me wrong, I love to pay lower taxes, but to me it seems that the House bill and the Senate bill differ so much that we're going to need to see a lot of unity amongst congressmen to come together and do something. And unity and Congress really don't seem to go hand in hand these days. So although I am excited about the prospect of lowering taxes, I'm not convinced it's going to be happening in the near term. I hope I'm wrong, but I don't think I am, unfortunately. So with that, I'm not convinced that this increase in the market today was necessarily due to the tax reform being passed in the House, and that's one reason. The second reason for that is that if we're going to have all this tax reform and everything's going to be great for business, then why is XLF only up 1 penny on the day? That's the other thing. In terms of what's driving the markets today, I see more of technology, consumer staples, so XLK, XLP, and the SCLUs, that's more of the things that are driving the markets today, as opposed to the tax reform. So that's one thing that I'm seeing in the market that's lighting up my tape, so to speak. The other thing, oil keeps going towards 60. We had a relatively flat day today in the slippery stuff, but we still have that in that we could go to 60 with that. So with the energy sector, the other thing to consider that I think is always an overlooked wild card is that it is possible that we could have a cold winter this winter. Now, I'm by no means a weather forecaster, but if we do have a cold winter this winter and natural gas has greater demand and prices for that go up, that's another kind of a hidden wild card for the energy stocks, because a lot of them, not only do they drill for oil, they drill for natural gas, and they kind of take whatever they can get. I know I'm oversimplifying that by quite a bit, but that's the other thing to think of going into this winter. In terms of volatility, I thought Andrew made a great point. I thought that as the market's moving 1% and the VIX is going up 40%, I thought that was insanity in terms of the movement that we're having on this. One of the things, and I don't really make this an indicator for how I make decisions on trades and that type of thing. But the fact that I'm getting certain clients, some of them might be listening to this show right now, and you know who you are, that are sometimes emailing saying, is this the end of the trend? And I have to admit, you guys argue and contradict things, not contradict, you guys argue and debate things that I say all the time in a friendly, good way. Of course, we have a very good professional relationship. But one thing that you guys never argue with me is my commitment to being bullish on stocks. And so these emails didn't really influence me, but I really did get a little more confident in knowing that there was some nervousness out there in the retail world when we were down a little bit these last couple days. So with that, I think these last few days have been a buying opportunity. I actually was able to scalp a quick put spread earlier this week in addition to the regular positions with which we have. But overall, what's happening in the marketplace, I think, has more to do with good business going on, good earnings overall, as opposed to geopolitical policy, which, quite frankly, that's a welcome relief. And that is what I saw today in the marketplace.
You know, speaking of seeing things, our listeners, they're prescient. They see all things. And we asked them last show. We had a quick little flash poll during the show. We said, hey, what are you guys trading this? What's on your radar to actually trade this week? We asked you if it was Walmart, Best Buy, Dicks, or Target. And you guys crushed it. 55% saying Walmart, only 27% saying Dicks, 18% I think saying Best Buy. So yeah, you guys were right on. This thing rocking and rolling, as the Rock Lobster alluded to, up at, I think, what, 10% or 9 handles, something more than that today. Let's see the exact. Yes, 99 up, yeah, over 10%, 11% on the day. So a great day for all things Walmart. Let's move on to some other names that are popping off here after the bell. It's still earnings season. We got some names coming off, including AMAT, Applied Material. They closed today. They were trading in the high 50s. They closed today at 57.84, up about $2 and change. So a nice little intraday move already. And then on top of that, they were pricing in about a $2.60 move there. So roughly a little bit shy of 5%, about 4.5%. And so far in the after hours, they're off about 80 cents. So about not even 2%, not even 1.5%. So far, at least, a little bit underwhelming. Again, maybe bucking the buy premium trend we've seen throughout most of the cycle so far. Gap also popping off after the bell. I know this is one of your cohort, Mr. Sebastian's. He loves the retail clothiers out there. Gap, ticker symbol GPS. That ticker always befuddled me. Who thinks GPS and Gap in the same sentence? But that's a conversation for another day. Gap closing today. They were trading about 27 and change. Closing today, 27.5. Trading now, they're pricing in, about $1.80, so a little over 6, about 6.5%. In the after hours, they're off about $0.50, so about 1.75% or so. So interesting stuff out there. I don't know, Mr. Rocklobster, seems like you're still just basking in the afterglow of Walmart. Is that one just that blew your doors off today, huh?
When the only thing I can say is, bull markets are when crazy money is made. You make crazy money when you're the only buyer, when things are totally at zero. But in a bull market, and when you can buy just cheap options with tons of time, and a company as big as Walmart is up 10% in a day. I don't know about you, but you got to check around for your bull market because it's here. And I don't know if, like Tusa said, I don't think it's going away. It's crazy. It's we've seen higher valuations for stuff before, certainly a couple times in my lifetime, but there are places that still have not participated anywhere near this. So, but when you see something like that, I mean, that's a $250 billion company gains $25 billion in a day. That's a lot of shekels, man.
That is, everyone's been lamenting the death of retail for all of 2017. Apparently, all that retail has gone to Walmart because they got it all. And I guess they ain't scared of Amazon because they're rally ho mode. Everyone else terrified, running in terror of Amazon coming into their space. Walmart says, bring it on. And apparently the market liking what they're seeing. Speaking of liking what you're seeing, hopefully you're going to like what we have next because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. We're laughing. We're having a good time here in the studio between segments. You guys, we should have. That's why we don't do it on video. You don't see what we're up to. Yes, welcome to the Odd Block. This is indeed the portion of the show where we break down what's moving, shaking, rock and rolling, catching our eye in the weird, the wild, the unusual paper. I could see Dan's eyebrows picking up on this one. So we got to start here, as we always do in our Odd Block, with just the weirdest paper of all, Mr. Cook. You haven't been on in a while, so you haven't heard us talking about these before. These are our Tesla, I guess you can call them Catastrophe, Crazy Town, Elon Musk, life insurance, call them what you will, but they just continue to light it up. These are the Jan 2019 50 puts. Yes, I said 50, listeners. Lighting up yet again today. These things just passed the 30,000 open interest mark about a week or two ago, and already they're up to 33, almost 34,000 open interest. They continue to trade. They traded again today, 232 of these. They're trading 62 at 75. So these are not cheap puts by any means, and they continue to light it up. We've heard every. I can see you're just stunned over here, Dan. Like we've heard every explanation known to man. This is a hedging some sort of CDS. These are Elon Musk life insurance. These are people buying it to hedge against in case the company goes out of business, so they can still pay for their Model S or whatever. I've heard every story known to man. Dan, this is obviously crazy town paper. What are your thoughts on these? These are beyond out of the money. These are wipeout puts. And then just the fact that they continue. This is far and away, number one with the bullet, the largest open interest position in Tesla. It's crazy.
I'm just in utter dismay. I actually thought this was a typo. I thought you left a digit off the front of this. I thought it should have been 150, 250, 350, not just 50. So what is that? 262 points away?
Roughly, yes.
for Gen 19, it does. It sounds like a life insurance. And maybe if I'm Elon, I'm going to be watching my back if so many people are trading these, because it just seems like crazy town to me.
It does seem like there is some ratio paper going on these days too, because the pars. The 100 puts are also lighting it up. Whenever the 50 puts seem to trade, the pars also do. So maybe whoever's hedging these CDSs or whatever they're doing also has discovered the par strike, because that's probably, I don't know where it falls. I haven't looked in a little bit, but probably somewhere in the top 10 for strikes is probably the Jan 100s here as well in 2019, because they have nearly 19,000 contracts, another 140 trading today. So yeah, it's crazy, inexplicable paper, yet it continues to print. Maybe partly because we talk about it so much now, but we're driving some of this paper. Mr. Rocklofs, you can admit it. You guys are launching a new fund over there in Carmen Line. It's all these Tesla puts, is it not?
You know what? It's hard to keep Mark away from wanting to buy them. You have to lock the door to the Tesla put store.
Just smack his hand with the ruler. Say no. That's the risk manager's job. Sure, it's not pretty, but you can do it.
Exactly. It's not that I don't think they might work, but we can't do it. Those puts actually might be down money when Tesla's trading 100, maybe. After the vol comes out.
There we go. There is some juice to be found in them Dar Hills, that's for sure. You guys have sent them to us before. If you have new theories on who the heck is doing this and why, by all means, hit us up. I think we've seen every theory under the sun by now, but I'm sure you have new ones. You're always hitting us up with new ideas. Moving on to another name that's been a subject of a lot of speculation. Another T name. This is Time Warner Inc., ticker symbol TWX. Closing today right around $88, even, up about nearly 1%, so kind of following the market up on the day. It's a name that's been doing decent paper of late, all of it driven by that's M&A speculation. About 26,000 contracts a day. Today doing about 117,000. Today was kind of like a pick your poison day out here. It was just lighting it up on lots of names, lots of strikes, but a lot of it seemed to be coming on the put side. In particular, of that 117,000, about 100,000 of it was puts. Only 17,000 came on the call side. So it was pretty much a lot of put action today. It was kind of pick your poison. We saw March, a pretty sizable put spread going up in March to the tune of the 75.85 put spread. Going up for $3.75. Looks like paper gobbling up that one, doing it about 20,000 times. Opening on both strikes, no real open interest to speak of there. We also saw size out of the money. You can call it a roll or maybe a spread, depending on how you look at it here. Stupid, probably more likely. Here it was the Nove 60 Jan 50 put roll, spread, call it what you will, going up 12,500 times. Size OI on both strikes, so this could be just closing down an existing position. Looks like paper, they were pretty aggressive on both of these prints, but more so even on the Jan, going in above the ask. Could have been maybe a late print there. But again, size, open interest on both of these strikes. Just in these two trades, we're talking, well over 50, 60,000 contracts going up here. So almost half of the put volume, more than half of the put volume, and almost half of the ADV going up just in these two trades. Let's look back. It's been kind of a tumultuous year here, and tumultuous few months really for Time Warner, of course, with all of their talk of deals and trying to what they could spin off to make deals happen, and so a lot of back and forth. This thing got as high, it was not that long ago, back just in early October, about a month ago. They were trading about 103, getting into about 103 and change. These days, post developments, post earnings, not looking so good. Like I said, $88, almost even today. So you can maybe see an argument, Mr. Rock Lobster, why people are interested in some puts out here. But that said, it's interesting stuff. I know you guys is Time Warner been lighting up your pitch chat over there with all this M&A activity going on, and what do you make of this? All these puts, spreads, and rolls and whatnot out here.
Isn't this one where AT&T is buying this company? This was that big takeover.
Yeah, it's a deal with AT&T.
And then they have to, spin out CNN. Remember that? I still think the stock hasn't recovered from that rumor last week or something. So yeah, this is a curious one. I actually have not traded it. I like buying AT&T just because of the divvy. Crazy yield on that thing. So I just assume I'll get some Time Warner eventually with it, but I haven't looked at it as a trade. But at this price, it's starting to get a little bit interesting again, maybe from an ARB point of view. So maybe somebody was buying this as part of the other end of a risk arb trade, and they're just trying to squeak out some dollars with it. There could be something very much on the other end that we don't know about. So, or they had a stock position, but right now, because I'm trying to look at it, it could have been some kind of funky condor or something like that, but it's hard to really figure this one out. But we're trading an awful lot lower than the deal price, it seems like. So I don't know. It's a slight ball of confusion with this one right now, but it looks a little, Time Warner does look a little cheap.
Speaking of cheap, someone's thinking that good old RH, formerly known as Restoration Hardware, could be getting cheap, or perhaps their concerns have been alleviated. Like I said, ticker symbol RH. I guess Restoration Hardware wasn't cool enough of a name. They have to go by the uber trendy RH now. Closing today, a good move for them, $104.81, up 25%, this name. So just a lot of things going on out here in good old RH today. People apparently liking what they're hearing out here in this name. This is the name that's averaging of late, not that much, about 8,200 contracts a day. Today doing well over 4x that, 39, nearly 40,000 out here. So a lot of action. And in this day when the stock is up over 100 and up 25%, what are people trading? What was number one with the bullet out here? I can see Dan's cracking up here again. He loves our crazy out of the money puts. Yes, it was the 30 puts. Yes, you heard me right. 3-0. The Jan 2019 30 puts, lighting it up today to the tune of 3,500. Again, a name that does only 8,000 contracts a day. 3,500 is a boatload. Coming up today for, looks like $1.80. There's 3,500 of those. There is size open interest here, so about 5,300. So there's someone maybe finally deciding, you know what, these 30 puts, I can see you chuckling, Dan. Are you a fan of these 30 puts? I guess maybe today they look like they're hitting the bid, so maybe they're getting the hell out of Dodge. They decided, you know what, that 30 strike ain't going to happen after all, particularly when the stock's up almost 30 handles in the same day.
Yeah, I mean, are they just getting out, trying to unwind something here? I'm actually baffled again. You've baffled me twice in the same show.
I like to bring you in studio so I could see your face when you're baffled at some of this madness.
Just looking at those for $1.80 when it's trading, what do you say, 104.80?
104.80, yes.
Yeah, these two between this and Tesla. I can't think of the CEO of RH right off the top of my head, but maybe this is life insurance as well.
Yes, we've befuddled Dan twice, so we've done our job here.
Which is not that difficult to do, actually, though.
On the old odd block. Well, let's look back at the year that's been. Obviously, this thing had to be, actually, it wasn't at those levels not that long ago. So maybe 30 puts, not quite as crazy as we see. It was trading, in the 30s back in February. Actually, it was trading lower than that. It was trading 25 and change. So got down as low as, about 25, 26 earlier, 24 and change back in February. So those 30 puts were maybe aggressive not too long ago. But it's kind of been a good year for a good old RH. I guess the name change and a few other things kind of crushed them because their chart's been pretty much a nonstop upward trajectory with a brief little blip back in midsummer. They hit 78 and they dropped back down to 45. So taking on the chin there, but then rally ho mode ever since that earnings in August. And I guess someone finally decided, you know what, those 30 puts aren't going to happen. I should take I'm surprised he got $1.80 for those. He got out, I guess, at the right time. I'm going to take my $1.80, Mr. Rock Lobster, and I'm going to put it to use somewhere else. Kind of hard to fault him, I guess. He took what he could get out of these things.
No kidding. How about the thing is, what's the margin on that trade to carry till, Jan 2019? Are they even going to make any money on that after commish?
Probably not. I'm looking here. This thing's went out $1.30. This is still a $1.35 bid. $1.35 at $3, so a little wide to close the day out here in Restoration Hardware. Surprise.
Well, yeah, I mean, you make that sale, and okay, yeah, that's $1.80 is probably free money, but I mean, you're going to be. How long are you going to wait to get those dollars? What's your return on the? What is that? $29. So $1.80 with what, a year and a half, I guess. No, a year and 3 months. I guess what is that? A 5% return on capital? At $29. Maybe 6%. It just seems like a hard way to earn 6% return on capital for a year.
You're assuming he's open. There's decent open interest. I'm going to be charitable and assume he's closing, and he's taking what's left of his capital and preserving it. In which case, it's a little harder to fault him. He's like, I got $1.80 left. I'm going to get it while the getting's good.
Well, you know what? It's possible too, because Restoration Hardware did trade in the 40s, so not very long ago. Which is, again, hard to believe. The stock's had a huge run in the last, in August, what was this? August of 2017, was it really trading $44?
Yeah, it got up to 78, dropped back down to 40 some odd. I haven't been following this name. Sounds like I should be. This name's been maybe it was
somebody about puts in stock, and they're just, the stock portion is up so much money, they're like, the 30 puts aren't doing anything for me anymore.
They bought puts in stock. If that's the case, let's be charitable and assume that too, in which case they're laughing all the way to the bank, and the puts are it's just a little free money left on the table. Hopefully let's assume he did it 2-to-1 stock and puts. There we go. He over levered. Then he's super happy camper. Let's just be those guys.
Happy.
Let's be super positive today on the old hot block. Dinner's on him when we find out whoever this guy is who bought so much stock and a little bit of puts here in Restoration Hardware. This name's been lighting it up. You might have a new candidate for your pitch chat there, Mr. Rock Lobster. Who knew? Restoration Hardware slinging so much vol. Dan's just cracking up over here. He's loving our odd block. Let's see if we can keep the yucks coming. This is our final name. This one didn't get a lot of love on our earnings trading poll, but it's still lighting it up. This is Dicks Sporting Goods, ticker symbol DKS, closing today about $28, up about 4% or a little over $1 on the day. It's a name that does about 4,000 contracts a day, so not huge, but from an odd block perspective, not bad. Today, doing about nearly 21,000, about 9-to-1 calls over puts, so a lot of call action. Kind of including this vertical that went up, it looks like about 3,600 times here. It was total of the day. Looks like about 4,400 actually. A little more paper going up at the end later on in the day. Was the D26, 28 going up. Like I said, 3,600 times total of about 44. Looks like paper selling out maybe the 26s and perhaps rolling up. It could be a little bit of a aggressive roll, because not aggressive, more of a house money roll, because you dig into the OI a little bit. There is some size OI in the 26s to the tune of about 4,500. But they just opened these bad boys about 2 days ago, back on the 14th. So this was obviously a pre-earnings scoop, and looks like it's worked out pretty well for them. The stock, like we said, up a bit since the announcement. So they closed on the announcement at about $25.59. So up about over $2 now, about $2.50. So those 26 calls looking pretty juicy these days. But our friend here decided not to close out the party, not to take the money and run. He's taking some of the money and running, but he's putting the rest back to work on the 28 strike. So that's kind of interesting, deciding not even, usually you see this and you got a house money roll. Usually you're rolling out somewhere. You're rolling to Jan, give yourself a little bit more time. But no, he's staying in Dece. He's just moving on up the chain. So taking, what do you take? Took a $2.25 off the table, put $1.12, about half of it back to work on the 28 strike. So interesting thought process here. I'll be curious to hear that as your risk manager mind, Mr. Rock Lobster, what you think of that. But looking back at the year that's been out here in Dicks, we talked about them before. It's been kind of a challenging year for them. The death of retail has not left them unaffected. Even though you see a Dicks, it's like everywhere you go, you see a Dicks Sporting Goods. So they got to be doing something right. But that said, or maybe that's the downfall. They spread too far. Either way, stock not looking good this year. Starting the year up about 62, 63, and pretty much half of that now, shy of $30, even less than that. So it's been a rough year. Pretty much even back in July is when they really took a beating, dropping from like 38 down to the mid to low 20s. So it's been a long, slow, kind of bad year for Dicks. But our friend here, liking the upside, and so far it's hard to argue with Mr. Rock Lobster. He's done pretty well in his 2 or 3 days of trading some calls here.
his timing was pretty good, wasn't it? Sometimes doesn't it always amaze you how good the timing is on some of these things.
Amazing how it's like they almost like they know something.
It's crazy. Why they're moving to the same term, I don't know. I guess they just want to ride for free at this point. So, but at the rate Dicks is going, and with all these retailers that everybody thought were dead after, that everybody got, I shouldn't say everybody, but there was a lot of Amazoning going on. So they're looking, you look at some of this trade and you look at some of this retail trade and you're thinking, wow, are we going to have a little Santa Claus rally with all the good retail numbers from some of these, from just, kind of restoration hardware is Dicks, they're all retailers. They're all in their own niche, but selling their own stuff, but they all seem to be selling a lot of stuff. So, maybe the bull case is not too bad going into the end of the year if retailers are selling lots of stuff. So, but I don't like rolling up to the same month. That gives me
I knew that would give you the heebie-jeebies. That's why
it just gives me the heebie-jeebies. I would rather buy the time and try to,
I've been doing this long enough to know.
Confidence in myself to be right twice.
I know what bothers you. So whenever I see this stuff, I'm like, oh, Andrew's gonna love that one. You roll into the same term. That's a no-no, listeners out there. Give yourself a little more time to work. Cost you a little more money, but c'est la vie. We've seen weirder things. This guy's already up some money, so he doesn't need to listen to us. Stakes are on him when we find him is there as well. Speaking of things that are on him, Dan Cook ably jumping into the fray here. He's going to decide and take the strategy block on his shoulders today. So without further ado, let's get right into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. This is usually the portion of the show where Uncle Mike cups down from the mountain, stone tablets in hand to dispense some options, wit, and or wisdom. Today, Mr. Cook deciding to jump into the fray, so I have budgeted for him. What, about 40-odd minutes? Does that sound about good to you, Dan?
That sounds about right. I think you just lost half your audience just on that comment, and the other half will be leaving about 2 minutes in. So, yeah, we can hit it from there.
But, I mentioned it kind of before at the top of the show. I think it's kind of worth touching on again. When we used to do the Futures Options Roundtable, it was always interesting to me to see the use cases for binaries. And one of the primary ones that particularly feeds back into our audience, which were the active options traders, is there was a good use case for using the binaries as, I guess you can call it a bit of a hedge for the main options position. You have a big options position on, and you decide for whatever reason you're worried about event X. Maybe it's an earnings, something else, or a crop report, or something, or some sort of report in oil, and you don't want to spend the money. The binaries come in, but that's enough for me. You do this all day. Why don't you tell our listeners exactly what the heck I'm talking about, sir?
Yeah, absolutely. There's a few different use cases, actually several different use cases on binary options. We touched on it a little bit at the top of the hour, but going right into what you talked about, let's say you're looking at the NQ or an equity index. Maybe there's earnings, some of the major components that really move that. You could look to a binary option to maybe alleviate some of that downside risk. Now, one thing I'd caution for those of you not familiar with binary options is at expiration, they are all or nothing contracts, right? So either you make money or you don't at expiration. So I think it's very important to understand that you can trade out of these, because you'd hate to be one tick away on your expiration where you really need it to drop one tick and it just doesn't do it, and then your hedge is kind of unraveled. So where a lot of people will use these is they're looking for that short-term move. It's very short-term protection. Because of the short-term nature of binary options, you don't pay a lot of time value. So in a lot of cases, you're looking for an event if you're looking to hedge off some type of event risk. In that case, many people would look to sell something that's high value. Every binary contract is worth $100. Sell something at 90, and what they'll do then is put limit orders out at 60 or at 50. The rule of thumb on a binary option is if it trades at that strike price with time remaining, it should trade somewhere around a midpoint of 50. And so be a little conservative. They'll look at what they need to manage on their risk and throw that limit order out there to take profit if it does hit that. Also gives them ability, if they're trading in the underlying futures or currencies, to maybe move their stop a little bit farther. If they're expecting volatility, they've been in a position for a little while, they don't want to smother the market because they know they could get whipsawed out. They might push that stop a little bit farther because they're alleviating some of that risk with the binary options.
Yeah, it's interesting, and it makes sense because it is, if you want that hedge, but you don't want to deal with picking up a monthly or even a weekly. I mean, if you're just worried about a crop report or something coming out of the oil markets for a day or two or a minute or two, that's having those kind of short duration type contracts and being able to do a bite-sized hedge, which is when you think about what the weeklies were designed to do, and yet people have just engulf these as a premium harvesting tool. But so binaries seem to be filling that void a little bit. Has that been a good? I got to imagine this is got to be a pretty good driver for you guys these days because you're in the binary space right when the weeklies have just been lighting up. So you're seeing a lot of kind of people migrating back and forth between the two.
I can only see on the binary side, but it is a good driver. I mean, remember when everybody was just talking 2 years, 3 years out, right? And then all of a sudden we started going down shorter time frame down to the weeklies. I'm actually surprised the weeklies haven't had more in the traditional options more success because I think they're a great tool when you're looking for that short-term move. You don't pay all the premium. Not that that's been a big issue we've seen where the VIX has been, but the shorter term, particularly for people that want to be active in the market, and I think one thing also with the binaries where we really see it is it's a great learning tool for people to get in and actually start understanding options because you get all of the components, you get the time factor, the volatility factor. But because of the short duration, you can actually see those working very quickly. And so it makes a great starting point for somebody interested in getting into options and looking to apply some of these strategies, whether that be on binary options or more vanilla options as hosted on other exchanges.
Speaking of that starting point, one of the things I like about the NADEX stuff is that the pricing, options pricing can be confusing, quite frankly. There's a lot of different components. We've talked about it on the show many times. There's extrinsic, intrinsic value. The volatility is not that much of a component these days, but it still exists. Rates not that much of a component, but they still exist. There's all these different moving parts. Binaries, I like the way they're set up because it's pretty much 0 to 100, and it's all based on pretty much the probability. If you think it's going to be a 50% chance that it's going to happen, it's priced at 50. If it's going to be 100, it's happening, then it's priced at 100. I think there's a certain intuitive logic that a lot of people who are new to the space can probably wrap their heads around more so than a traditional option.
Yeah, I think you're exactly right. That was one of the first things when I started looking back at them in 2007, was that you had really all of the information you needed directly from the price. It is a probability, 0 to 100. Is the market saying it's a 60% probability it's going to happen? Maybe the market's saying it's a 20%, like some of these other ones we saw in the unusual activity, not even 20%.
I think that's charitable, 20%.
Charitable, yeah. Let's say half of 1/10 of 1%. But no, you can derive everything from the price, and you can start learning those characteristics. You can see how volatility impacts the price of an option. You can see how time impacts the price of an option. Binaries are a little bit different in that it pushes everything towards the center rather than increasing the premium. But you can start learning those characteristics, and it just gives you a great way also if you want to learn a new market, right? Nobody will learn ever how to trade in a demo account until you put real money in. We do offer a demo account, I'll say that, but until you put real money in the market, and this gives a lot of people, particularly people interested in options or just the markets in general, to get in and do it in a limited risk environment at a size they can handle. They can put 500 in, 1,000, 50,000. Everybody has a starting point, so it's a good way to get in and learn the markets.
Speaking of getting in and learning, we got a few minutes left here, so let's get some of you guys in on the show and see what we can learn from your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block. Like the man said, this is where you guys ask questions. Sometimes we ask you guys questions, too. We like to do that every week. This week we're asking you guys, this Bitcoin battle is heating up in terms of who's going to have the first listed Bitcoin actual derivative that you can trade. CME's got their version on the Bitcoin reference rate. SIBO has theirs on this Gemini index. So we asked you guys, what do you think you guys will be doing sometime early next year, 2018? How will you guys be trading Bitcoin? You think it's going to be the CME Bitcoin reference rate futures? Is it going to be the SIBO Gemini futures? Is it going to be you just want to stick with your regular old Bitcoin, or are you just not a fan of all things crypto? Let's go around the horn. Uncle Mike, we'll start with you. What is your vote, and what do you think our audience, the crazies out there, are voting for?
Well, I'm going to still say CBOE just because of the fact that that's what people trade. And even though from what you guys were talking about on Monday, the Merc does have a lot more popularity at this point, it seems. I think the CBOE is going to reach out and get their base, the people that want to do it. In terms of me, I think it's interesting to watch, but I don't think I'm going to put any of my money in it.
No crypto on the strategic night. All right. Well, maybe another day. Mr. Rocklobs, the same question for you, sir. What do you think is going to win, or what do you think? Yeah, what's your vote, and then what do you think our audience is voting for?
I think. Oh wow, geez, Louise. I think the audience is going to be interested in just the regular. They're going to go with the future, and they're going to go with the name they know the most, probably the CBOE Gemini future, and they're going to be trading.
And I've angled the screen away from Dan so he can't cheat and look at the actual answers. Dan, what is your vote here?
This is pretty interesting, actually, because we used to list a derivative on Bitcoin. We delisted it 2 years ago. Substantially different market. We were probably a bit ahead of the curve.
You were too ahead of the curve there.
We were a bit ahead of the curve, although it's been amazing. Our phones have been lighting up. Over the last several weeks, I've received probably 5 emails today from people that use Tradium asking if we're going to relist something. And
it's a lot of love.
It is. And so, I'm actually going to go with an option that's not here, which will hopefully be a NADEX option.
Back on the show one time, he's already going off the menu here.
Absolutely. Well, no, we're still in the exploratory phase. Obviously, still a very new market. Anything we do needs to be approved by the CFTC. So we are looking into that. If we do bring back that type of contract, I think it'd be a great avenue for the individual traders interested in Bitcoin as an easy way, cash settled, to trade Bitcoin.
So you're doing a write-in for some sort of unnamed NADEX Bitcoin product, which is what you're telling us?
Don't hold me to anything. Remember how long it took me to get the bull spreads removed from the website?
Yes. Took a little while.
2 years, but no, it's something that we're definitely exploring. I mean, we've got to listen to our members, and it seems that the demand is there at this point to seriously consider this again.
People want this thing, and so far here, we got a couple days left here. So it's question of the week. So you got a few. It goes into the weekend, so you got a few days. If you haven't, head on over to Add Options to let your voice be heard. So far, it's the lion's share is 44% saying they still don't trust crypto. They don't want to touch it, but they still want to vote in a poll. So there still is motivation there. 23% saying they want to stick with the regular Bitcoin, and 20%. Number 3 for the CME Bitcoin reference rate futures, and only 13% for the CBOE. So interesting stuff. I thought it would be a little bit flipped the other way, but c'est la vie. Our audience wants what they want. Speaking of what they want, we got a question here. Let's see. We got time for a quick one. Let's do a quick one here. This comes from JLC8. He or she wants to know, what is the shortest term option available? Is it equity or commodity? Well, I got the guy sitting next to me who probably has the answer to this question. I'm going to go out on a limb here, Dan, and say the answer is probably somewhere on the NADEX platform.
Yeah, absolutely. The shortest we list intraday contracts, so very event specific, in a matter of minutes or daily or weekly. So it can be very short term if you're looking for a specific driver. I would guess in most other exchanges in the traditional options, you're going to see weekly as the shortest option. Although I have heard some rumors, I don't know if you have, Mark, that eventually we could see something like a daily option.
Well, we're kind of almost there now anyway, aren't we? I mean, we have Mondays, Wednesdays, and Fridays now in a lot of products like SPX and others. So when you're trading those and you come in on that morning, it's effectively like a daily. So I guess we're missing the Tuesday and Thursday of that equation. But once we get that, we're like 2/3 of the way there already. So people we kind of backed into a daily. I would if I had to guess, I'd probably say maybe a year might be a little charitable. Maybe sometime in the next year or two, I think we'll have the full strip of weeklies, and then people can play back and forth between the binaries and the weeklies because they'll all be popping off every 5 minutes, and it'll be all sorts of fun. All right, we got time. We got to keep on rolling though into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we break down what we keep an eye on for the rest of this week. Let's do a quick check back on some of our names that were popping off after the bell today. We started off with Applied Materials, AMAT. They were pricing in about $2.60, and right now in the after hours, they're up $1.50. Still shy of that straddle, but still a little bit more of a move than we were seeing a little while ago. We also were looking at Gap. They were pricing in nearly $2, about $1.80. And here in the after hours, lo and behold, they are up $1.80. So there we go, about almost exactly in line with what they were pricing in here in the after hours. So a little bit of extra. You see, give them a little time to bake, and they deliver in the end. Speaking of delivering, Mr. Rock Lobster, we'll start with you. What's on your radar for the rest of this week, sir, into the old weekend? Or are you still just blindsided by Walmart? You can't think of anything else.
That's a happy problem. I like to actually see just option vol come down and kind of confirm this, and if we get a little bit of a crush here into the holiday, because it feels like there's still Thanksgiving holiday premium stuff like that is still in there, hasn't come out yet, and I think there's an inkling of truth in what Mr. Tusaw said about, the House passes the tax thing, but they only got 13 days, and the Senate's a bit crotchety, and blah blah blah. So I don't think that vol is going to come out until that happens, and if it doesn't, we're in kind of that iffy phase for vol, but the market, tenuously probably winds higher. But I'd like to see some vol come out and see if we can hit that 2,600 number. But until the vol comes out, I don't think we will.
Uncle Mike can go out on a limb and say you are also waiting for that magical, mythical new high to be set. Am I correct, sir?
The magical, mythical 2,600 in the SPX. I am looking forward to it. In terms of the vol coming out, well, who knows? But we're 15 points away from it right now. And we're also only, we are only roughly 70 cents away from an all-time high in SPY. So we could see some action tomorrow. I'm curious to see how we react on Friday right after a big day like today, and that are people going to take the money and run on Friday after today? Is it just a short squeeze, people wanting to just, and then people that made money just say, hey, I've had enough of this? Or is this going to be a thing of excitement of markets saying, I got to get into this market for the weekend? Tomorrow's going to be an exciting day, I think.
Dan, last but not least, what's on your radar for the rest of this week? What do you keep an eye on? Are you still watching the crude markets this week, or what are the products that are in focus for you as the week wraps up here?
Well, right now the Tesla 50 puts, I think, are up.
You're just fascinated.
I'm just fascinated,
by those.
No, I think I've got to agree with these guys. I think I'd like to see some confirmation tomorrow. Before heading to the weekend, we've got the holidays. I agree with Mike. We're not going to see anything as far as tax reform come out, even though there seems to be a lot of optimism that it will happen at some point. I'll tell you tomorrow when we close the week. I can't imagine anybody's going to be too anxious to get in over the weekend before Thanksgiving holiday next week. So we'll see if it confirms tomorrow.
Yeah, I got that old holiday. That pesky holiday waiting to get out of there. Speaking of getting out of there, we got to get out of there. That music means we're done. But before we wrap up, let's go one last time around the horn, see what everybody is working on that may interest you. Let's start with you, our guest, Mr. Cook, if you can tear your eyes away from those Tesla puts. If listeners are listening to this and like, I want to try myself some of their binaries, where should they go? What should they do?
Absolutely. They should come to NADEX.com. We have a free lifetime demo account. I think it's very important as the exchange to make sure people understand how the platform works, understand how the contracts trade. I think they're great. There's obviously no guarantees that you'll make money in any market, but we've got to give you the tools. I'm currently working on redesigning our entire education center as well to make sure people have those tools. If they want to come in, if they're experienced traders or if they're new to the markets in general, we want to make sure that they have all the tools necessary before they start putting real money in the market. And it's free to get that demo.
Gotta like lifetime demos. Those are always, stand behind your stuff, I say. And if you're willing to, let people come in and kick the tires and light the fires. I got a feeling once they start playing around with it. Like I said, I think that pricing, that's so intuitive. I think that resonates with a lot of people. And
technically, Mark, as a matter of full disclosure, it's not lifetime. It expires in 2055.
Oh, okay, I'm sorry.
So I just wanted to make
effectively
sure. Effectively, a lifetime demo.
If you're a millennial, you may need to re-up in about 30 years or so. But other than that. You're good. I'm glad to see the lawyers. The lawyers have gotten to you. Let's go back around the horn. Uncle Mike, you have no lawyers, so what's cooking? Let's say I was interested in perhaps getting rid of some ticket charges or perhaps slinging some skew. Where should I go? What should I do?
Oh, you got to give me a call. If you're looking for a financial advisor who's not afraid of the word Vega, feel free to contact me. Or if you are a large institution or a pension fund and you're looking for a place to park some cash for a year or so, listen to the October 6th episode on the Option Block app where I talk about my beloved Skew Fund. A lot of exciting things happening in the world of RCM right now. Give me a call. We'll talk 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
What if I'm afraid of Vega? Can I still call you? Can you just talk me down off the ledge there? Will that work too?
I'm always happy to talk down someone who is having a Vega attack.
Yes, the Vega attacks. Those are scary when those happen. And last but not least, he's had a Vega attack or two in his day, I'd have to wager. Mr. Rock Lobster, what's cooking in the land of the pit, sir?
How do you escape the Vegas? Oh, you know what? VIX made easy tonight. Actually, for everybody listening to this, won't be tonight. It'll be, you missed it, but and then my VIX made easy course the week after Thanksgiving. So if you can't figure out why VIX does things, we'll help you. There you go.
There you go. VIX made easy. So if you're in the chat right now, listening live, you can hop on over there. Head on over to optionpit.com. It's really easy. Click on that link because we like things that are made easy. They too can help you with your Vega attacks. So if you're worried you got those Vegas just giving you cold sweats at night, then head on over. Let the Option Pit boys help you out. Now, on behalf of Dan and Andrew and Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, sending those questions. Keep them coming. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.